Hello dear traders, welcome to InstaForex TV channel. You're watching a weekly link up with me, Anna Kasatkina. We'd like to discuss the ongoing situation on Forex with technical analyst Peter Yakimovic and forecast further moves of popular currency pairs. This week, traders are watching a stellar rally of the euro-dollar pair for obvious reasons. Investors feel relieved at the outcome of the EU summit. The state leaders came to a common denominator and green-lighted the massive recovery fund worth €750 billion. This landmark decision cheered up investors and boosted prospects for the EU economy. Amid market optimism, the euro spiked to a two-year high against the US dollar. Can the euro keep the strong bullish momentum, or does it make sense to expect a downward correction in the short term? Let's ask our technical analyst Peter Yakimovic. Hi Peter.
Hello dear traders. On the euro versus US dollar, basically what I found is a very strong upside momentum. So basically last week it was a potential for some downside rotation, but basically the strong demand for the euro currency basically made a direction for this currency pair. And in my expectation, since we broke the strong swing high at 1.1480, that basically opened the door for an even test to the 1.1800 in the next period. Basically, based on the weekly time frame, I found that there is week to week we're going higher, basically making a higher high and higher low, and I really see the potential. We also got a breakout of that channel in the background, and I'm expecting that euro can retest the top of that channel, which is exactly at the 1.1800. So buying the dips on the reaction on the 2-hour, 4-hour time frame can be like an interesting idea to do on the euro versus US dollar.
Meanwhile, the US dollar is extending weakness. Market participants are fretted about escalating jitters between Washington and Beijing, so they are poised to sell the US currency. The pound sterling is taking advantage of that.
On the British pound versus US dollar, there is a similar situation. Basically, the level of 1.2665 is acting like support, and basically the previous resistance, that swing high, now became a support. And I see this currency pair and expect for this currency pair to continue with the upside pressure towards the swing high, the 1.2815. And there is still more power for the upside. There is an even potential for the much bigger target at the 1.3100 level, which is a basically level, the cluster of the swing highs based on the previous price action on the daily and on the weekly time frame. So a preferable strategy will be to basically go and try basically to go long on the dips on this currency pair. So again, my expectation is to the upside towards the 1.2815.
Traders are losing appetite for risk, so gold is developing a stunning bullish run. The precious metal surged to the strongest level last seen in September 2011.
I decided to cover the gold since there is a very, very strong condition on the gold. Basically, gold is in my opinion, is going to test that all-time high at a 1,923 level. So there is still space for that test of that all-time high. There is a very strong environment, very strong upside condition on this currency pair, and basically very strong impulsive movement on this one. So my expectation is gold will test that and maybe even break that all-time high at the 1,923. And buying the dips on the 4-hour time frame, 2-hour time frame, depending on what type of trader you are, I think will be a good idea on this one. So expectation to the upside towards the all-time high at the 1,923.
Thank you, Peter, for your trading recommendations, and see you next week. You have watched the link up on InstaForex TV channel with me, Anna Kasatkina, and Peter Yakimovic, technical analyst of InstaForex. We wish you always profitable trading and see you soon.